Investors and traders, welcome to the channel. Market Chart button. Today is 8th of June 2025. Hope everyone is having a fantastic weekend. We'll take a look at the key markets in this video. We'll cover the dollar, the debt markets for the US. Then we'll take a quick look at the gold market and then the stock indices. As always, this video is for educational purposes only. It is not a financial advice. So what we're looking at is the daily chart of our timing model. We had key dates come in, a minor timing date come in on the 8th of May, and then we have seen just the market go sideways to higher. Now over the weekend we do have a date coming up. So I think for the next early part of the next week, so 9th and 10th of June, it's going to be effective. So we could see some sort of a pullback perhaps in the market. We'll see. It's not on the chart, but that's also a date that I am watching for. And then we have another date coming up on the 26th of June 2025. So let's start by taking a look at the debt markets. So this is going to be our 2-year treasury note, and here last Friday we had a big jump in the yield, so nearly 3%. That is quite unusual because here last time we had something similar, was right here, 2nd of May. Now we have this key resistance zone, which we have been looking at as possible resistance here, and there's a chance the market could get into this, but getting above this 4.22 it's not going to be good. This means the yields could rise to 4.63%, and that could actually also put pressure on the risky assets stock indices. And then if we take a look at the TYX, which is the long bond on the yield, we can see that really big move, 1.62% on the long bond. And if we take a look at this on the 10-year, which is used in many calculations, and then we can see this one was up 2.64%. So this is quite big moves, and surprising because it has come after the market had actually closed for a number of days below the key resistance level that we have been watching, and also on 2 consecutive daily closes below the 20-day moving average. So something must have been going on last Friday, which actually caused the yields to jump higher. So let's see if we get a follow through on Monday and Tuesday, because that is going to be really important. Otherwise, if this resistance level that we have been watching is taken out to the upside, the yields could rise quite a lot. And if we were to just take a look at this on the futures chart, so you can see that here, this has been where the downgrade came in by Moody's, and then we were really watching for this key support zone, and then despite the downgrade, we were watching for the market or the yields to move lower and the price to move higher. This is what we have seen, but this surprise move of last Friday, that's there's a lot of selling here. That's putting this into question, but we'll see if we get a follow through or not. And then really interesting things also happening in the dollar index. So we have been watching dollar for a really key level between 98 and 99 level, and last Friday the market was up about half a point or half a percentage, which is kind of what we were expecting, because the market is finding or trying to find a lot of support between this level. And this also happens to be the 78.6% Fibonacci retracement. So between the 61% and 78.6%, the market is trying to find some sort of support, and there's a chance it might actually find some support there, because getting below the 98 on closing basis, especially this 97.66, you're going to be looking at this black ABCD pattern, which in my opinion might actually already be in play, and the market could go down as 94.50 quite quickly, in fact. So this is what we're looking at in dollar. And if we were to take a look at this on the inverse side by looking at what is happening with the Euro USD, so you can see on the weekly chart, this candle formation, this wick, I do not like that. And if the dollar weakens, we could still see 1.18 on the Euro USD, 1.17. That's going to be the ABCD, but it's likely we might see consolidation or sideways price action as the dollar begins to find bidders between the 99 and 98 level. Okay, so now let's take a look at the gold market, because the gold market was really interesting. Let me go down to the the daily chart. Here we go. So we had really key pattern formation come in on 15th of May, and we have seen the market rally, but it has just gone towards the top of the range, and it's just kind of stalled there. And last Friday the market was down minus 1.34%. And let's see, when was the last time we saw something like this? 27th of May, but there was just no follow through. Market just went into more consolidation, and this one is minus 2%. There was a follow through, and then we had minus 1.25%. But there was a follow through, and then we saw the market retrace quite a bit, and actually did this ABCD fashion. So here we're really watching this market really carefully, because it's got a potential to retrace a little bit further down. But as long as this 3117 is held on the COMEX gold, our bias is to the upside. But if we take a look at this on really long term monthly chart, although we are really in the beginning of the month of June, and we have got the entire rest of the month to go, let's not forget that month of May was an inside bar. So the market is consolidating, and eventually it will break out. Which direction, we'll have to wait and see, but there's a chance we could see further consolidation in June as well. And if it turns out to be another inside month, that's going to be something quite unique, which we haven't seen in quite a while. And you can see this is the monthly chart here. Okay, now let's begin to take a look at the stock indices. But before we jump into the stock indices, just want to show you the returns which my system is watching for, and I get these reports on daily basis. I'll be putting these charts in on my Substack, and the link for the Substack will be in the description. And if you want to subscribe to the Substack, you're more than welcome to do that. It's going to be free, but you'll be able to get these charts and a few other things which I'm not able to cover in the videos because of the time restrictions. And we can see that last Friday on the daily basis, Dow Jones Industrial was a winner. S&P 500, they were all above a little above 1%. NASDAQ around also 1%. And then Bombay Stock Exchange, SANSEX did really well, nearly 1% as well. And look, the biggest losers were the volatility indices. So the volatility was actually falling. And then if we take a look at this on the weekly basis, then Hong Kong Hang Seng is performing really well, up above 2.2%. Nearly 2% is the NASDAQ 100, and S&P 500 is catching up at 1.5%. So you can see pretty good recovery in the US indices last week. These are month-to-date returns, and the German DAX, which is this one, is actually performing really well, up 22%. That is really remarkable performance. And then year-to-date basis, and then the Hong Kong's Hang Seng Index is number 2. Okay, and you will, if you look at the Substack, you'll also get what my system picks up as the stocks which are outperforming the S&P 500. So you'll have the screenshots of those there as well. Okay, so now let's move our attention to the world indices. So let's start by taking a look at the HSI. This one has performed really well on year-to-date basis. You can see that. This is where the year it started. There is a really big pullback on the 7th of April. Now it has recovered quite nicely on the weekly basis. It's still below the 17th of March lows, so I think it's got a fair amount of catching up to do. But it's also got this 3 rise to a top pattern as well, and as we have seen a fair share of a retracement already. And on the daily basis, look, it's just there. Now this is the Bombay Stock Exchange Index. It just went into consolidation. We are looking at for it to get up to 83,240, and last Friday it had a pretty nice rally. And then if we take a look at the European, this is German DAX, I think it's quite likely to get to our upper target right here. And if we were to take a look at the UK's index, it's also doing very strong. So Europe is actually very strong. Look at this recovery it has done, where DAX has actually gone and made new all-time highs actually. Now if let's move to the S&P 500. This is a daily chart. So as I mentioned, there is some timing coming in over this weekend. Next early next week, we could see some sort of a pullback happen in this market. But what we are looking at is, as long as the 7th of April lows are held, I think the chances are that we might have seen the lows for the rest of the year 2025. Sure, there could be there's going to be a lot of volatility. We could see sharp moves to the upside, sharp moves to the downside, but on day closing basis, this low I think is likely to be held. But we'll have to wait and see. But because it was a completed pattern right here in time and price, and then we have a similar pattern in the nasdaq as well. So here we go. So if a pullback does come, I'll be watching that pullback really carefully and with a lot of interest, because that is going to give a lot of information for what sort of moves we could expect for the rest of the year, just the second half of the year. Because I'm expecting it to be more of a pullback, but it could be a pretty sharp pullback, and this just all turns out to be more of a trading range, and we could see, you know, the market pulling back quite ferociously to the downside, which could, which could be pretty a scary thing to take a look at. And but this is what I'm really watching very carefully. 7th of April lows. Now let's take a look at Russell 2000, which has been one of the weakest ones, and on last Friday actually it closed up really nicely, 1.61%. So that's quite surprising, because the yields were up as well that day, and we have seen the small caps perform quite well. So this is really nice. Look at this week, up 3.4%. I'm going to include the Russell in my reporting for the indices returns. This one is missing for some reason. And look at this nice recovery right here. Last but not least, this is gonna be the New York Stock Exchange index. Look at this, really nice weekly return of 1.32%, very strong. But it's also approaching these highs right here. This is why I think, because of the timing as well, we could see some sort of a pullback, which I'm looking at right now as a pullback only. So this is what we are watching, a bit of a shorter video because there's time constraint. I really appreciate you guys watching the video, and if you're interested in looking at those charts I showed you, they will be on the Substack, and I'll put the link in the description. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.